Investors continue navigating an economic uh, environment defined by rapid technological innovation, changing monetary policy, evolving consumer behavior, and increasing geopolitical uncertainty. While many markets remain near historical highs, analysts cautious that the coming quarters could bring increased volatility as investors reassess corporate earnings, interest rate expectations, and the pace of global economic growth. Let's begin with the United States. US equity markets ended today's session with mixed results as investors weighed stronger than expected. Corporate earnings against concerns that economic growth may moderate during the second half of the year. The technology sector once again led over market performance. Large software developers, semiconductors, and manufacturers, um, cloud service providers, and cybersecurity companies continue attracting strong institutional investments. Artificial intelligence remains the dominant investment theme across financial markets. Over the past several years, businesses have rapidly increased spending on AI infrastructure, purchasing advanced computing hardware and expanding cloud capacity to support increasingly sophisticated machine learning models. Investment analysts estimate that enterprise spending on AI technologies could continue growing at double-digit annual rates throughout the remainder of the decade. Unlike previous phases of digital transformation, artificial intelligence is affecting nearly every sector of economics simultaneously. Manufacturing companies are improving production efficiency, banks are enhancing fraud detection, healthcare providers are reducing administrative workloads, insurance companies are accelerating claims processing, retailers are improving inventory management, transportation companies are optimizing delivery routes, agricultural businesses are forecasting crop yields with greater accuracy, energy companies are managing electrical grids more efficiently. As AI adoption expands, economics expect productivity growth to become one of the most significant drivers of long-term economic expansion. Nevertheless, financial markets remain cautious. Technology companies currently account for a historical large percentage of major stock market indexes. Some analysts argue that investors' enthusiasm has pushed valuation above levels justified by current earnings. Others believe today's valuation remains reasonable because future revenues opportunities associated with artificial intelligence are substantially larger than previous technological revolutions. Only future earnings report will determine which perspective provides more accurate. Turning to monetary policy, the Federal Reserve continues effacing its commitment to price stability while supporting sustainable employment. Inflation has moderated considerably compared with recent peaks. However, policymakers continue stressing that inflation remains above their preferred long-term objective. Interest rate decisions therefore remain dependent upon economic data. Investors continue monitoring inflation reports, employment statistics, wage growth, retail sales, manufacturing activity, and consumer confidence surveys for indicators regarding future monetary policy. Bond markets have become increasingly sensitive to economic releases. Small surprises within inflation or employment reports frequently produce immediate movement in government bond yields, corporate borrowing costs, and currency markets. Housing continues representing one of the economist's most closely watched sectors. Higher mortgage rates have reduced affordability across many metropolitan areas, Although demand for housing remains relatively healthy, financial costs have discovered many prospective buyers. Builders continue adapting by constructing smaller, more affordable homes while offering a financial incentives designed to stimulate demand. Real estate professionals believe housing activity may improve significantly if borrowing costs gradually decline over the coming year. Consumer spending remains resilient. Americans continue allocating substantial portions of household budgets toward travel, entertainment, and restaurants, and digital subscription services. Luxury goods manufacturers also reported relatively stable demand among higher income consumers. However, trailers experience stronger customer traffic as many households continue seeking better value amid elevating living costs. Consumer preferences increasingly emphasize convenience. Online shopping continues expanding, same-day delivery services remain popular. Digital payment systems continue replacing cash transactions, subscription-based business models remain attractive across numerous industries. Companies capable of combining digital convenience with personalized customer experience continue outperforming many traditional competitors. Across Europe, markets remain cautiously optimistic. Several manufacturing indicators improved modestly after extended weakness. Industrial production stabilized across selected sectors, include aerospace, pharmaceuticals, automotive manufacturing, and specialized machinery. European governments continue investing heavily in strategic industries, semiconductor manufacturing, renewable energy infrastructure, battery production, artificial intelligence, and defense technologies remain among the highest investment priorities. Officials believe strengthening domestic industrial capacity will reduce dependence upon foreign suppliers while improving long-term economic resilience. Energy remains a major focus. Electricity demand continues increasing as transportation, manufacturing, and digital infrastructure become increasingly electrified. Power companies announced additional investments in renewable generation, nuclear facilities, battery storage, and modern transmission networks. Data centers supporting artificial intelligence applications require enormous quantities of electricity. Consequently, utility companies have become unexpected benef- beneficiaries of the AI boom. Several regions are now competing aggressively to attract technology investment by expanding reliable electrical infrastructure, turning out attention towards Asia. China continues implementing policies intended to stimulate economic activity. Government officials announced additional support for infrastructure projects, advanced manufacturing, and consumer spending initiatives. The property sector remains under pressure. Several developers continue restructuring financial obligations, while authorities seek to stabilize housing markets without encouraging excessive speculation. Manufacturing remains an important strength. Chinese exporters continue expanding production, electric vehicles, renewable energy, equipment, batteries, consumer electronics, and industrial machinery. International competitors within these industries continue intensifying. Meanwhile, India continues attracting substantial foreign investments. Um, Strong demographic growth, expanding digital infrastructure, and increasing domestic consumption continue supporting investors' optimism regarding India's long-term economic potential. Japan also remains an attractive destination for international investors. Cooperative governance reforms encourage management teams to improve profitability and shareholder returns. Shipping companies report stable foreign volumes, while logistics providers continue investing in automation and artificial intelligence.